What's up guys, Ryan here, back with another video, and in this video I'm going to be going over the two key concepts you need to perfect your market maker model trading. And so what I'm going to be going over today is going to be time and price, right? So we know that ICT concepts, time and price, is very, very important, and I've seen a lot in the comments how I don't mention time or price as much as I should, and so that is why I'm making this video, right? So the reason why I haven't really touched on time and price as much as you guys would like is because I want you guys to burn this fractal into your head, right? It's very, very important that we have this fractal at the tip of our mind, okay? We need to be constantly aware of this. We need to ingrain this in our mind, right? And we need to make this a part of us, right? If we're going to use this, right? If you guys find value in this, if you guys think that this setup is really going to help you and the willing percenter is going to help you towards profitability, use it, because it's helped me immensely and others as well. But right guys, if you guys don't find any value in this, no harm, no foul, right? Just keep moving along, and you can find other people who are teaching on YouTube, or there's other mentors that you can invest in. And so yeah, if you find value in it, use it guys, study it, because it is very, very valuable, and it is a very helpful tool for you towards profitability. And again, that being said, if you don't find any value in this, move right along, okay? No harm, no foul, and keep it pushing, right? So we're going to be going over time. We're going to be going over time very, very quickly. And so this is just through my back testing and my findings throughout my trading career. And so we're going to want to be paying attention to the 3 o'clock, 6 o'clock, 9 o'clock, and 12 o'clock hours. If you go out to a 1 hour chart, you guys are going to notice that a lot of times the highs and lows of the day, right, on that hourly chart, okay, they form at these times, right? So 3 o'clock is actually right in the middle of the London session. So London session is from 2 to 5 a.m. and 3 is right in the middle of that. And so that's going to be one of the times that, excuse me, that's going to be one of the times that we're going to want to focus on. And so 6 is kind of in a gray area because it's the end of London session going into New York, as well as the end of the actual trading day over on the indices and futures markets, right? So 6 is kind of in a gray area, and we kind of don't want to focus on 6 as much as 3, 9, and 12, right? So moving on to 9. 9 is halfway between 7 and 11 to 11:30, right, which is the New York session, right? So 9 is going to be that sweet spot where we're going to want to see highs and lows form on that hourly chart, okay? When we bring in SMT on Tuesday to Thursday, right, for high and low of the week, this becomes a very, very useful concept to use in terms of when to anticipate the SMT to form on that hourly chart. And it's just a good framework to hunt that SMT and the high and low of the week, right? So we can kind of get in on the lower time frames and pick up some setups on the lower time frame, right? And the last time of day that we're going to want to focus on is 12 o'clock. So it's opening price and London lunch, right? So if you are an Asian trader, or if you trade the Asia session, okay, it is very, very fruitful. And I must say this before we go on, through my backtesting data, right, over a long period of time, the crosses such as Euro Jappy, Pound Jappy, AUD Jappy, NZD Jappy, they perform a lot better and more frequent than the majors. And that may shock some of you guys or surprise some of you guys. I highly recommend you guys go back and study those currencies, and you're going to be surprised at what you find and what you see. And so that's going to be it for time, guys. I'll go into some other findings that I've come across in my trading career, but the main focus of this video is actually going to be price and the ranges. Okay, so if you guys are familiar with ICT, you guys are aware of institutional price levels, and they come in the way of 20, 50, 80. My apologies here, I don't know what happened. 80 and 100. Right? Okay, but through my study and through my findings, okay, 35 and 65 are also very significant levels, and these are the 6 numbers that I specifically look for in price ranges and also in price, right? So we'll just dive a little bit deeper into that right now. And so here I've just mapped out time. So this is 12 o'clock, this is 3 a.m., and this is 6 a.m. And so this is gold. This is a market maker sell model on gold. And we're going to be looking at predominantly these 3 setups. So this one, and this one. And so what we're going to want to be aware of, guys, when we're trading optimal advance and we're using the 1% R, okay, you're going to want to be aware of the ranges that unfold. Okay, so the retracement. Okay, so again, what numbers do we look for? Right? 20, 35, 50, 65, 80, 10, or 100. Right? So here we have a 10 pip retracement. Right? If we fractal it down on a lower time frame, okay, this is technically 100. Right? So we want to see that number when we look for retracements, right? Depending on the time frame and the setup that we have, right, we want to see these numbers unfold. Okay, it's very, very important. It adds a lot of confluence to the setup that we're going to be taking. The expansion, okay, and again, guys, it's not going to be perfect every time, right? So it's not going to be to the pip in certain situations and in certain setups. Yes, it's going to be to the pip, but you're going to find a lot of setups aren't to the pip, and they'll maybe be 3 to 5 pips off. Okay, so it's not going to be absolutely perfect, right? So in this instance here, this long that we have here at this balanced price range, order block, little fair value gap in here, right? We're oversold on the indicator, willing percent R characteristics. We rally higher, and we roughly create that high at 65 pips, right? So we retrace 10, and we expand 65, creating the high here. Right, so that's one of the numbers that we want to look for also, right? 65, very, very important. And so the nicest setup that we have here, right, optimal advanced setup that we have, this is very, very beautiful, right? So we come up here, price creates a high, right? And this is at 3 o'clock, right? And what did I mention? Right, that highs and lows are going to form at those numbers. And you can clearly see in this example, in this market maker model, right, that we have a low forming just after that 12 o'clock hour, right? Up here, we have a high forming just before the 3 o'clock hour, right? And then over here, we have lows forming at that 6 o'clock hour. All right, guys, time is very, very important. Back test it. It's a very, very useful tool. Especially with this framework as a whole. And so moving right along into this second setup that we have here, right? So we're going to take the retracement. Again, it's 10 pips, 10 points. Okay, give or take. It's not exact, but it's 10 pips. Right? It's 10 pips. And so that's one of the numbers that we want to see. Okay, unfold. Right, when we're looking at price ranges. This also can apply to consolidations. And so I'm just going to take the consolidation here and see how many pips that this is. Okay, so roughly 30 pips. Okay, it's not 35, it's not 20, but like I said, you have to have a 3 to 5 pip buffer on these numbers. And I'm sure actually if we take just this small, tiny little consolidation in here, yeah, just shy of 20 pips. give or take, right? 20 pips here. Okay, very, very similar to retracements and expansions. We want to see consolidations utilize these numbers down here. Okay, be very, very aware of that as well, right? So the retracement in here was 10 pips, and we're going to look for the expansion. How much did we expand lower? Okay, just shy of 50 pips. Okay, so 48 pips, right? And so that's very, very close to that number 50, right? And remember what I said, you got to have that 3 to 5 pip buffer, right? It's not always going to be perfect. If it was perfect, it would be a little too easy, to say the least. Okay, here on this setup, 30 points. Right, just going to mark out the William percent R here so you guys can see that this is a valid optimal advanced setup. Right, so we retrace, it's probably going to be roughly 10. The expansion is 30. Yep, and the retracement is 10 pips again. Right, so the smaller the retracement, the better. Okay, you don't want a big old retracement, deep retracement into the premium in this case, right? And we love to see those signatures of just price hitting that fair value gap and then declining, right? And moving lower in the form of a low resistance liquidity run, right? The deeper the retracement we have, the more that we fill the gap, right? It's better if we don't fill the gap completely. Okay, we want to stay in that discount level of that fair value gap. Okay, and that's going to yield the best setups and the low resistance liquidity runs that we're looking for, right? So you guys can clearly see that we have these numbers playing out in real time, right? If you go back and backtest this, you guys are going to be very, very surprised at your findings. The chart that I want you guys to go backtest is US 100. Okay, go back and backtest US 100. And you guys are going to have some findings that you're going to be probably very, very surprised with. Okay, and once you guys go do and backtest these charts in these two concepts, let me know down in the comments. Come back, right? Engage, guys. Ask questions. I'm here to serve. I'm here to help. Like I said, I try to answer every single comment that there is. And so if you have a question, a genuine question, not a silly question, okay, I will answer your question as soon as I can and give you guys the feedback and service that you need, right? So we're going to cover this last setup over here before I end this video. When is the high form over here? Just to boot. This is at 9 o'clock, guys. So the pivot points, right? The pivot points within the day are going to form at these times. Okay, I may turn it into a time thing as well. Okay, we're on the topic, and I want you guys to think of an ICT concept. It's a macroeconomic concept. Okay, month 5 content in the 2016 mentorship, and it is quarterly shift theory, right? So every 3 months, every quarter, right, ICT anticipates a change in state of delivery. And so we can apply that same concept, right, just down on a micro time frame, right? There's 12 hours in the morning or in the first half of the day and 12 hours in the second half of the day. We can apply the 3, 6, 9, 12 the same way he uses the quarterly shift theory, right, in terms of the change in state of delivery every 3 months, right? And if you guys backtest that too, it's very, very beautiful. But it's the same thing applied to a lower time frame on that hourly chart. Okay, some of you guys may already know this and have already started to apply this principle, but for the new people, I feel like this is really, really going to help people in their journey to profitability. And so we're just going to take a quick look at this range here, and we're going to call it a night. It's pretty late here. It's like 2 o'clock in the morning. So this expansion here from the low to the high, 35 pips. Okay, 35 pips. What's the retracement? 10 pips. Right, so you guys can clearly see that the numbers, right, so the price and the ranges, right, so 20, 35, 50, 65, 80, and 100 are very, very significant, right, and play a big, big factor in price in the algorithm and where the highs and lows are going to be made. And it just adds a lot of confluence to our complete understanding of the market maker model. And you guys can be expecting more videos like this in the future. The reason why I haven't really touched on this part is because, like I mentioned before, I want to have that fractal burn in your mind if you guys are going to be using this, right? And so you need to have that fractal replaying in your mind all the time, right? You need to be visualizing it, anticipating it, practicing on a demo account, right? Getting comfortable with it, right? And once you do that, then and only then I would suggest adding in these key times of day, right? And these key price ranges, and also the utilization of the price over here, right? So we can apply the same thing in terms of the ranges to the price. So gold is pretty how do I say it? Like if you look at the right on the right side of the like the price side here, right? You can see that it gyrates quite a bit. But for example, I'm not going to do all of them. I'm just going to do this one. So within that fair value gap, that balanced price range that we do have that 350 level, right? 2030.350, right? If we go over here, okay, we have that 350 level again, just shy of that fair value gap, right? So it's not always going to be perfect. Give it a couple pips buffer in terms of your entries and your exits, and the highs and lows that are going to be made in and around those numbers. It's not going to be at that number every time, like I keep saying, right? But it's going to be a couple pips off, 3 to 5 pips. It's not going to be perfect every time. It can't be, right? So here, right, we're just shy of that 800 level, right? That's one of the numbers that we look for, right? The 80 level. And price comes in here at 2,026,800. Okay. There's so much more I want to talk about. But yeah, this video is already long enough. So if you guys have found this video insightful, please like, comment, subscribe, share this with another trader who may find this insightful. And until next time, guys, I hope you guys have a great night, a great rest of your weekend. God bless you guys, and we'll see you in the next video.